This is Ash Heatwell, Director of Wealth Management at Graves Light Lenhart. Based on the positive feedback received from many of you, we are opting to communicate via video, not only for our quarterly newsletters, but also for our shorter monthly updates in between. The purpose of these short monthly updates between quarter end is to provide insight as to what we've observed in the markets during the prior monthly period, while also pointing out a useful takeaway or trend which we've observed in the form of a chart of the month. We continue to welcome further feedback from our clients. On the right side of the slide is a performance table which provides returns across major asset classes for the month of May, year to date, as well as 12-month returns through the end of May. You'll see that for the month of May, equity returns were consistently positive following lackluster performance in April, with many indices returning to all-time highs. While first quarter earnings generally exceeded market expectations, strong operational results, particularly from chipmaker NVIDIA, resulted in the information technology sector delivering the strongest performance of all sectors. This helped lift momentum and growth-oriented stocks, as reflected by the second arrow on the left, as these factors within the equity market were able to recover following their weak performance in April. Fixed income returns were generally positive for the month of May, which is shown by the arrow on the right, as we observed interest rates moving marginally lower during May. While inflationary trends have remained stickier than what the Federal Reserve would like to see, the most recent inflation print for the Personal Consumption Expenditures Index, or PCE, which is the Federal Reserve's preferred measure, was in line with market expectations and provided some relief for interest rate-sensitive bonds. Encouragingly, while interest rates have broadly moved higher over the last 12 months, most components of the bond market have still been able to offset any price deterioration through higher average coupons, as observed by the 12-month returns column on the far right. This is our chart of the month, with the data compiled by FactSet. With the first quarter earnings reporting season nearly complete, we are able to take a look at current data and trends which reflect forward 12-month earnings estimates from nearly all of the S&P 500 constituents. The dark blue line, which the arrow is pointing to, indicates the forward 12-month earnings per share forecast of the aggregate S&P 500 index. Importantly, when this line is shifting upward, it reflects upward revisions being made to forward earnings estimates for these publicly traded stocks, a positive indication for the prospective fundamental performance by many of the largest companies in the U.S. economy. Not included in this illustration is the breakdown of forward earnings forecasts. Encouragingly, these statistics reveal that corporate profits are anticipated to broaden outside of the 7 largest companies in the S&P 500, commonly known as the Magnificent Seven. We highlight once again that there are many components of the global stock market which carry solid fundamental prospects while at less demanding valuation levels. We remain vigilant on valuations, particularly for U.S. large-cap stocks. As shown on the chart, S&P 500 prices have outpaced forward earnings expectations. In short, this means that investors continue to pay above historical valuation levels for U.S. large-cap stocks. Thank you for your time and interest. As always, please let us know if you wish to discuss these items or any other issues related to your financial planning needs. We are here to help.